Okay, just want to dispel a few myths. It's easier to put it into video than to actually write about it. This morning, the headlines are, let's get rid of this. Italy eyes 40 billion bank rescue as first Brexit domino falls. Not true. Well, the Brexit part isn't true, and you'll see why in just a second. So Italy needs a 40 billion bank rescue as first Brexit domino falls. Let's have a look. Let's go back to May, shall we? May the 10th to be precise. Quiet crisis. Why battle to prop up Italy's banks is vital to EU stability. Forget Brexit or Grexit. 360 billion of bad loans within a fragmented Italian banking sector could be the biggest threat of all. And this is something that I've been talking about for years. Never mind now, where there's all this hoopla about the referendum and everything. The Brexit is a sideshow. It is a non sequitur when it comes to what's really happening in the Eurozone. They're printing 60 billion a month to buy bad debt still, and they're also buying corporate debt now. And if you were to go, and if this was a deal, in my opinion, if somebody offered you a business deal with that sort of proposal, you would be saying no thank you. But this is what's going on behind the scenes, and of course the mainstream media here in the UK are having an absolute ball. So now, again, Brexit domino falls. It's not true. It simply isn't true. The Eurozone is a financial basket case. It was going to implode by itself anyway because of the high levels of debt. They've done their best to keep Greece in there, and now Italy, Portugal, Spain all have the same problems as well. And while we're talking and not reporting the facts, let's just have a look at the markets and put it into some sort of context as well. These charts are monthly charts of the price action of the markets. And let me just get rid of this grid. There's a way of getting rid of this somehow. There we go. So if you look along the bottom, you go all the way back to 1995. And by the way, this is the pound, all the way up to the current of 2016. And certainly the pound has dropped. But look at it earlier on in the year. It was already down at the 130 levels. The 142 levels, and now it's just moved lower. I mean, it's not as if it's making any great news. I mean, we're already back down to 2008 lows for the last banking crisis, but all of a sudden, the world's falling apart. No perspective whatsoever. They don't give you the full story. Yes, it is a 31-year low. No disputing that at all. But we were already heading there anyway. The pound had weakened from June 14 all the way down from 171 all the way down to 140 anyway. So again, just the mainstream being sensationalist about the headlines. This is the FTSE 100 going all the way back to 1994. You can see what's known as the triple peaks or triple tops. This is the banking crisis of 2008. I don't see a big sell-off in the market here. Market even made a low last August when the Dow lost 1,000 points in the pre-market session. Again, sensationalism. And this is exactly the same for the Dow Jones as well. That's the Dow. And again, you can see the market has had some turmoil in the last couple of years. It's certainly going to get a lot more going forward. But let me just go to a weekly chart. Get rid of the grid again. This is the Brexit. This is January, which is also interesting. You see, here's another issue. The central banks cannot increase interest rates because of the volume of debt that they have. If you increase interest rates, it increases the payments on the debt they all have, and that's why in the UK we are still on emergency rates. Believe it or not, we're on emergency rates from 2008 when they dropped them from 5% all the way down to half of 1% in the Bank of England. It's absolute nonsense that's being portrayed in the media. There is a financial catastrophe coming. It's been coming for the last 6 or 7 years, and it's going to play out whether Brexit's there or not. People need to get used to the idea. It's all been comfortable, but we have printed ourselves into oblivion, and we can't service the debt. And now Brexit has come along, and it's going to get the blame for everything, when it actually was going to start unfolding from this month anyway. You only have to go back and have a look, and of course you've got the Italian thing coming up this morning. That would have come up this morning anyway, as it did in May, but nobody was taking any notice. So in December of last year, the Federal Reserve increased interest rates by a tiny fraction of 1/4% and the Dow Jones dropped 2,000 points. I don't see a drop of 2,000 points from Friday. It is coming, but I don't see that the Brexit has caused a global crash in the stock markets. The markets were brought back by Draghi, Carney and Yellen, and that's where they've remained to this point. There is some weakness around, there's no doubts about it, and the daily recordings I do, you can go back and listen to those, and I have forecasted this coming all the way back to last year when we had the August lows. You can see how they're desperate to keep bringing these markets back using government money in order to do so. I know a lot of people who actually watch these recordings trade the markets, and you'll know as well as I do that these opportunities are rare, but when they come along they present some of the best trading opportunities around, especially in this situation, because of course this is a major event that's taking place, and it's got to at least a couple of years before the negotiations are done. But in between all of that, of course, there's the uncertainty, which creates more volatility and more trading opportunity, and that's across the board as well. So in future videos I will also give you pointers to which markets are going to make the moves, either up or down, and how you could play those markets as well. Right, that's it for the time being. I will let you know when there's another recording. Other than that, thanks for watching. See you in the next one.